Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how we have another sort of deadline, sort of. As well as that, I really want to talk about, how almost every occasion now, every time something big is building up, we get a fresh new date. Plus, I want to talk about how the new norm in the market is favoring the big over the small. And ask that question, and I want you guys to let me know your thoughts on this. Is that looking a little bit dangerous? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. With that out the way, let's get started. So yeah, first of all, I want to really ask the question, is orange the new black? What do I mean by that? What do I mean by that? Well, basically, it's the 8th of July today, as we all know. And yesterday, or not yesterday, tomorrow was the 9th of July. 9th of July, which there was a lot of anticipation about it. In many ways, the markets were ignoring it slightly, and probably in hindsight, for good reason as well, because the 9th of July has now become the 1st of August. And let me explain what I mean by that. Because the 9th of July was the self-imposed deadline for the pause to the steep April tariffs would go back into effect. Remember Liberation Day on the 2nd of April? When we had this big, long list, President Trump brought this big cardboard list of tariffs he was going to impose across the globe. And then on the 9th of April, he went, no, I'm going to do a 90-day pause, which would be the 9th of July. Okay, giving us 90 days to make deals. But the only deals we have seen has been with the UK, which I've said time and time again on this program. It's one of probably the easiest trade deal to do. And Vietnam. Okay, and Vietnam. Now, there was a lot of anticipation. What will be happening tomorrow? Would we potentially see Liberation Day 2.0? But no. Day before we hit the 9th, we get a new date to look forward to, or to be aware of. Okay, and this has a different objective, because what Trump has done, or the Trump administration has done, should I say, they sent out a number of letters to a number of different countries implementing tariffs, which range between 10 to 50%. Okay, 10 to 50%. And these tariffs are supposed to start on the 1st of August. 1st of August. And here are the tariffs. I mean, two of the big hitters who got these letters, apparently, was Japan and South Korea. And these are the listed tariffs, okay, which are going to be implemented, apparently, on the 1st of August. Now, Japan is one of, it's a big trading partner with the US. In fact, 4.5% of US imports is Japan, okay? And they're going to be facing a tariff of 25% come the 1st of August. South Korea, another big trading partner as well, they're going to be facing tariffs. Well, not them technically facing, of course, this underline that, actually. The US consumer will be paying 25% tariffs on South Korean goods. Thailand, the US consumer will end up paying 36% on goods coming from Thailand, Bangladesh, 35%, etc., etc. Cambodia, is, 36%. Okay, so these are all the tariffs or tariffs which will be paid, like I say again, by the US consumer by the 1st of August, at the beginning of the 1st of August. But here's the thing. We've been here before, haven't we? So I'm asking the question, and the marketplace asking the question as well. Is this again another delay tactic or a negotiation tactic? Okay, because again, we were supposed to be looking at this tomorrow. Wondering what's tomorrow going to happen. If you go through it, first of all, 2nd of April, Liberation Day, all these tariffs, 9th of April. Now we're going to delay it for 90 days. Coming up to the 90-day expiry. Okay, a day before we hit that date, here's another date we're looking at. Okay, another date we're going to look at. It's going to now be the 1st of August when these tariffs are going to kick in. Again, understandably, giving countries more time to negotiate, because like I've already said, the only deals we've got confirmed was the UK and Vietnam. Now you will say to me, James, hang on, the markets got really excited a few weeks ago because there is framework for the deal with China. That's really true. There is nothing concrete, but a framework is there. However, since these letters have gone out and been delivered to a number of these countries, China made a warning to the United States in relation to restarting trade tensions once again. Now, in a very popular newspaper in China called the People's Daily, they said this, okay? One conclusion is abundantly clear. Dialogue, cooperation are the only correct path. Went on to say this, the Daily. They referred to Trump's tariffs as bullying. As a bullying tactic, which China has often said that many times before. Don't forget when there was the height of trade tension between China and the United States, China kept saying, we just want respect. But the People's Daily, this newspaper, went on to say this as well. Carried on to say this. It said, practice has proven that only by firmly upholding principled positions can one truly safeguard one's legitimate rights and interests. So here's the other thing as well, which China is upset about. Okay. Part of this deal with Vietnam is that, yes, their tariffs have been reduced. Vietnam's tariffs, or their Vietnamese goods have been reduced, the tariffs on their goods. However, there is an extra tariff being implemented to goods traveling through Vietnam, i.e. China's goods. And China has, of course, threatened other countries to say, if you do go in pact with the US, which implement measures against us trading goods for your country or for your channels, we won't be very happy about that. So there is that tension as well. So the question I have to you, going back a couple of weeks ago when there was a lot of intense, almost name calling between the two countries, are we going to have another case of another round of who blinks first? Because currently, as it stands, okay, there is 51.1% on China exports, tariffs on China exports, and 32.6% the other way around on US goods. So there is still a lot to negotiate. Like I said, yes, we have a framework, okay? Yes, there we have. But again, this warning from China, again, going to the United States about their recent round of obviously sending out letters to increase tariff threats is unsettling the global supply, or the fears of global supply, once again. On the other side, the other biggest trading partners, EU and Canada, apparently, are rushing to make deal with the US in the coming weeks. They are not on this list. They haven't received an angry letter from the Trump administration like Japan, South Korea, etc. They haven't received an angry letter. And like I say, the EU is trying to push for a 10% across the board tariff, and Canada is rushing to try and get a deal done this week. So that would be interesting to see how it develops. But again, at the moment, what's the reaction to the market? Well, we've been here before, haven't we? We've seen this sort of before. Again, a delay, a build up, and then a delay. Is it the taco trade? Remember we did a video on what the taco trade was. The taco trade, unfortunately, someone told Trump what it stands for. Trump always chickens out. Are we seeing that again? Okay. Because like I say, the market is indeed calling, Trump's bluff. They think maybe come to the 1st of August, we might get delays again. We will delay it again. We've been here so many times. But yes, the market is mixed, and we'll look at the market in a little while. But in general, the market's like, we've been here before. And there is still a lot of optimism despite this uncertainty, which we've had since April. There is still a lot of optimism. In fact, just underline this, Goldman Sachs has increased their projection for the year finishing, or the year finish, the S&P 500 to 6,600 points from 100 points. So a big turnaround. Okay, so they're still extremely optimistic. But this brings me to something else I want to talk about, away from Trump's tariff war. Okay, and that is what we are seeing at the moment, we have seen over the last couple of months, is that the market is going more towards bigger companies, not small companies. Okay, and I'll explain, and we'll discuss this, okay? Because what we're seeing in the past, in the last couple of years, okay, you've seen a lot of people go for slightly smaller companies with bigger potential, or bigger, or real proper value, intrinsic value, thinking proper growth, okay? They're not at the moment. They're favoring larger cap companies who are growing and not going towards smaller cap companies, okay? Smaller cap companies, which, up until maybe a year or so was a bit of the norm. But now they're going totally to the big guys, the big guns. And as we can see with the S&P 500, okay, well, really it's the Mag 7 which is driving the S&P 500, okay? They have still maintained, despite this uncertainty, a lot of growth, The only one, well, there's two actually, but the one in particular who is really suffering, who's not having a good year, is part of the Mag 7, is Tesla. And we'll look at Tesla again in a minute. But Tesla's been under a lot of pressure, and it hasn't helped. Of course, the Trump and Musk's fight is continuing. Their biggest fallout, mummy and daddy are fighting. Biggest fallout, which, between them, because it even escalated yesterday with obviously Trump again turning on Musk, because Musk has said he's going to form another political party, which he threatened to do if Trump's big, beautiful bill got passed. And guess what? Trump's big, beautiful bill got passed. And now Musk is obviously going up against him and saying, I'm going to create another political party. But here's the question I want for you. Okay. We are very reliant, or the market is very reliant on the Mag 7, bar Tesla. Okay. And Apple's not had a great year, because Apple obviously is going to be affected by tariffs a lot as well. If you look at it, both the ones which have struggled at the Mag 7, Apple and Tesla, are mainly manufacturing. Cars, phones, computers, okay? All the other Mag 7 is AI tech. And NVIDIA is manufacturing, but it's AI, it's chips. But all the rest, like Meta, Amazon, well, Amazon's interesting because Amazon watching, because obviously that's still retail, that's going to be affected. But, all the other ones are really heavily investing in AI and cloud, especially AI technology. In fact, Meta has recently, poached, the top AI expert from Apple. So they're investing in this. But again, it leads me to this. Again, I've said this time and time again in this program over the last couple of weeks. We put in all our eggs, or the market put in all its eggs in one basket, which is AI. And can potentially we see another dot-com bubble? I did a video about this the other day, because another live broadcast. I discussed this the other day. Where the stock market is acting a little bit like it's 1999 all over again. It's partying like it's 1999. And like I say, we're not seeing an overall optimism because say the smaller companies are not getting invested, but the bigger boys, the Mag 7 or the Mag 5 really at the moment are getting invested in. But is this a telltale sign? But I want to have a quick look and what I can show you what I mean by obviously the market favoring big companies over small companies. Now this is the this is the Russell 2000, which is a group of 2,000 of the smaller medium cap companies. Okay, and this is the performance it's been so far this year. Okay, it's actually down just under 1%. Okay, just under 1%. But if you look at the S&P 500, and here's the thing, the Russell 2000, so the smaller companies, which are not getting a lot of attention, okay, is down nearly 1% for the year. All right, but the S&P 500, okay, is up so far this year, around about 6.07%. And here's the other point I want to make. Don't forget, both the S&P 500, okay, and the NASDAQ has been hitting new highs over the last couple of trading sessions. So there is optimism there, but we're not seeing the trickle-down effect to the smaller companies, which does sort of highlight to me there is a danger. We're getting over bullish and over optimistic with just the big boys, because we need more than just the big boys to drive the market and drive optimism. So that is one of the worrying things, which I'm just thinking we need to keep an eye on, certainly in the coming weeks, definitely. But anyway, let's have a quick look at the market anyway, see how the market's opened today. Like I said, the market is really sort of calling Trump's bluff. We've been here before. We've seen it before. This is nothing new. Change a date is, again, like we say, we're all questioning, is it a delay tactic or is it a negotiation tactic? We've been here before. At the moment, anyway, the S&P is down slightly, not dramatically, 0.08%. Same with the NASDAQ. Currently, it's slightly up by 0.2%. And obviously the Dow as well on this. Again, is slightly down 0.03%, negative 15 points. So it's not, nothing drastic. The market's been here. So there is no real concern. I want to look at currencies though, because currencies have an interesting day today. We're seeing dollar strength, which is interesting because the dollar's been under an awful lot of pressure. You can see the euro down 0.21%, but it's down back below 1.16. The same with the sterling, down 135 now. Beforehand the session it was trading around 136. So we are seeing the greenback strike back, and we can see that, of course, with the dollar index as well. Back up, nice move there so far in the US session, back up to 97. And don't forget, if we have a look on the longer picture on the dollar index, oops, correct my chart, there we go. We've had it's been under a lot of pressure over the last couple of trading sessions, but we're beginning to see the dollar strike back a little bit. And of course, we're going to have to look at gold. Wouldn't be a broadcast without it. Again, because we've seen dollar strength, gold is under pressure for the session today, currently trading around $3,301 an ounce. But as you can see, it's still hovering around that key level. So even though the optimism with the big boys, with the S&P 500, and with the dollar strength, is still holding close to that key level, still around the trend line, which tells me as well, if there's optimism, there's investors out there which are still a little bit cautious. Anywho, other things happening this week, which I want to talk about, I'll briefly mention, something to keep an eye out for, obviously, is we've got Royal Bank of New Zealand, Royal Bank of New Zealand interest rate decision. But the big one really this week is going to be, data-wise, that is the FOMC minutes, which is happening tomorrow. So it'll be interesting to see that. The market is going to be double guessing that to see if we get a hint, any hint at all, that the Fed may do either one interest rate hike or maybe even two interest rate hikes. So the FOMC minutes tomorrow is going to be probably the biggest data this week. We've just got German CPI and Canada unemployment rate. So, but it's really the FOMC minutes. Don't forget, this is a live show, so you can talk to me anytime you wish. Ask me questions, but more importantly, I like you. Excuse me. Ask me, you know, let me know your opinions, your questions, your opinions on it. What do you think about it? You know, so let me know anytime. As well as that, if you're not already part of the OneRoyal family and you're interested to find out more, in the description below, there is a little link, so you can click on it and have a look at us, and maybe you'd like to become part of the OneRoyal family. As well as that, if you're watching me on YouTube, obviously, because it's on the YouTube and the blog, by all means, subscribe if you like this sort of thing. There's a lot more stuff we're doing, a lot more educational stuff. So we are producing an awful lot of content at the moment, and we're going to change and do new things. So subscribe if you like. Hit the notification button so you know next time we publish a live broadcast like this, or we're doing another specialized video. And if you put up with me and you quite like my content and you put up with my over-the-top enthusiasm, by all means, give me one of these. It's nice to know that you like what we do, really. It's quite nice. The other thing I've noticed, a lot of people go back, they miss the live broadcasts, and they go back and watch the recordings, which is great. I love any type of support, is appreciative. And if you are watching the recording and you have a question or have a comment, you can put it in the comment section below. I will see it, and I will reply to it next time I go live on air, which is pretty much every day or so. Certainly when there's something to talk about the market, and the market is moving, you know, pretty much almost every single day. So bear that in mind. Okie dokie. What's wrong with my throat? Talking too much, probably. Anyway, if there is no questions, not a problem. Not a problem. Will leave me to say just this. Till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, the risks at hand for entering any trade. Till next time, every single one of you, trade safe.